I'm Dan Fitzpatrick at StockMarketMentor.com on Wednesday, February 13th. By the way, don't forget it's Valentine's Day tomorrow, so you need to take care of that, or you're going to have big problems. Okay, listen, in today's chart, I want to look at Comcast, and this is why. They announced pretty good earnings tomorrow morning, and the stock popped on that. But I think probably more importantly was that they also announced that they'd acquired the remaining stake in NBCUnivision from GE. They're paying $16.7 billion for it, but the market liked it. At least you'd think so, because the stock is still closed up about 3%. But look what happened. This thing really gapped up high at the open. This is called a gap and crap. Not my term. I actually stole it from someplace else. I don't know where or who. But, you know, twice used is once stolen, and I'm not the first guy that used it. But anyway, the saying remains, the phrase remains, gap and crap. So the stock opened up at 42 bucks. It traded to 42 bucks. That's it. And then it, it fell the rest of the day. First of all, this is a type of thing that's what I call a 59-minute trade, where you wait to see what the stock is going to do first thing in the morning when it's moved big like this, and then trade accordingly. I've actually created a course called the 59-minute Trader, which you can check out on Stock Market Mentor if you want. But this was a perfect trade for that. Short at the open, boom, closed before the end of the day. Actually, about 10:30 or so should get it done. Anyway, so what are we going to do now? All right, the fact that this closed up relative to yesterday's open is really significant. However, this creates a lot of overhead pressure on the stock. I don't think this thing is in danger of running away without you. I would actually still want to buy Comcast. I just wouldn't want to buy it right here, right now. You look at the trend, though. This is a stock that you just want to buy and hold. I can't say that this is a climax high, like, oh, it's a blow-off top. This is not a blow-off top. Blow-off tops occur when a stock has been moving higher and then suddenly basically goes like parabolic and finally boom, and then it reverses on massive volume. This is not that. The stock had been trickling higher in a nice gentle fashion. I don't think really this trend is over. I think you want to still use the 50-day moving average as a reference point for your stops. But don't buy just yet. I think you'll get a chance to buy this closer to the 50-day moving average. However, if the stock is kind of firm tomorrow, and we've seen this lately with companies where, they do this very thing, or perhaps even they move like LinkedIn did, which I covered the other day, where they move really, really high. You expect them to pull back and then they don't. Okay, that's okay to start scaling into. You just have to have a long-term time horizon, and I know so many of you don't. You think you have a long-term time horizon, you're going to buy a stock and hold it because you like this trend, and then 3 days later you sell it because it's lost 2% or it's gained 3% and you want to book some profits. So don't do that here. Be patient with Comcast. Again, I would buy it on the dip. This is not a dip yet. This is just a big reversal of a stock that opened up way too high for it to go any further. So wait a bit. If it starts getting down to about 39, that's a better entry. Okay, members, get over to the strategy session. This is really not a buy and hold market. It's kind of like you did buy, didn't you? Now you want to be holding. So we don't want to be trading around a whole lot, but I'll get into that more in the strategy session. I'll see you there.